can a surging US dollar take down this crude oil market? Crude's starting to see a little bit of downside, and maybe it is finally the US dollar strength setting in on this commodity market. As you can see historically here for the last couple of years, dollar and crude have generally moved higher. You have a dollar market that's up 10% in the last 3 years. You have a crude oil market that's up more than 100%. Of course, that's coming off of the lows that we saw in the pandemic. But this is pretty abnormal. We're going to go through a bunch of statistics and historical data here in a second to show that historically, if you go back more than the last 3 years, tends to be an inverse correlation between US dollars and crude oil. We'll also go through the theory macroeconomically why that is, and we'll also tie in what the time frame might be for a reversion to normalcy in this pairing of markets, USD and crude, and then also leave you off with, does it have to return to normal? We'll see. But yeah, like I say, crude oil finally starting to turn a little bit lower, got above $90 a barrel, reversed a little bit, but still relatively expensive, especially when you rope in more data. And a lot of people, myself included, wondering when the theoretical relationship might kick in between these two markets, or has the relationship changed? Because theoretically, USD and commodities in general have an inverse relationship, and that's mostly not necessarily the precious metals type of commodities, but agricultures, energies, those type of commodities that have very sensitive supply and demand dynamics globally for those goods, whereas precious metals are a lot of it has to do with flight to quality and some different angles there. But crude falls squarely into this type of relationship, whereby if the US dollar appreciates and crude oil globally is primarily priced in dollars, same as, wheat, corn, and soybeans, a bunch of other markets, then it's going to take more dollars for those in Europe, Asia, South America, everywhere to buy that commodity, here being crude oil. And so global demand is going to theoretically slow, and the crude oil price will theoretically fall. On the flip side, if we have a depreciating dollar, global demand might increase on the idea that, it's now cheaper for us to buy this commodity priced in USD, and the crude oil price might rise on that increased demand. That's how the theory goes. That's not what we've been seeing in the course of the last 3 years, but you back this up to the last about 15 to 20 years, we're looking at between US dollars and crude. And you can see that inverse relationship play out, especially look from 2008 until 2020, and you see the peaks in crude oil coinciding with lows in dollar. Especially that first big data point in 2008 when crude ran all the way up to $100 plus and then came all the way down. At the peak there, you're seeing US dollar lows for that same time frame in there. And then throughout the 2010s, especially 2010 to 15, US dollar is mining its lows throughout that period, and crude is trading around $80 to $100 a barrel, the upside of its historical range. Reverse course in crude oil around 2015, 2016, it takes a trip down to its lows, $40, $50, $60 a barrel, got down to $40 a barrel in 2016, and US dollar was able to rally during that period. And you even saw at the start of 2020, at the outset of the pandemic, you had that US dollar rally to its highs for the last several years, and you saw crude oil at the same time hitting lows. And so you're seeing that inverse relationship playing out, but you haven't been seeing it recently. You look at, we just showed for the last 3 years, and then also you look at the rightmost part of this graphic, and the relationship just looks like it's changed. And so the question becomes, has the relationship changed forever, or is this still in an inverse relationship that just needs a little bit more time to play out? We've just been witnessing some weirdness whereby crude oil's been rallying a lot to do with the Russian-Ukrainian war, and U.S. dollars have also been rallying for not the same exact reason, but a similar one, which is global economic fear. And so fear weirdly causing a bid in both, which we have rarely seen. So we'll see. Obviously, the prices will tell us if these relationships do revert to normalcy, or if historical normalcy, that is, or if there can U.S. dollar bulls and commodity bulls can live together. But I do want to take a further look at this relationship, because you look prior to that 2019 to 2018, 2019 to 2020 area, and you don't really see any positive correlations historically from 2010 to about 2019. It's to varying degrees, sure, but it's all red. And even in the last handful of years, we've seen a lot of red correlations, but we've seen more positive correlations between dollars and crude oil than we have over the course of the last decade in these last few years. Now, where are traders expecting crude oil to go in the future? They're thinking, and here you have the forward curve, which essentially goes for each crude oil futures contract in the future. Where's it currently priced at? And so if the crude oil future for December 2023 is $85 a barrel, right around where it's trading now in the spot market or the near-term futures, and the December 2024 futures are trading around $80 a barrel, then that would tell you that futures traders think that crude oil will, as of right now, be lower a year from now than it is right now. And you can see that the entirety of this forward curve for crude oil futures is in backwardation, or month after month, there's an expectation of lower crude oil prices. And so right now, maybe it's the delayed reaction of this U.S. dollar being higher and the expectation that USD will stay high, but crude oil will kind of come out of this Russian-Ukrainian panic mode, or something will occur over the course of the long term and crude oil will revert lower. Or traders just think, the US dollar part isn't necessarily a part of it, but think that in the long term, $70 a barrel thereabout is a more fair crude oil price. Right now, crude is priced much higher than that because of a couple of short-term cause and effect relationships, and it will get down to that level. Whatever it is, futures traders thinking that crude oil will come down in the coming years. That being said, these curves change on a daily basis, and they can flip from backwardation to contango. They can do whatever, or for instance, crude oil can be trading at $85 a barrel in this active month futures contract, and it can stay there, and the rest of these futures can also move up to meet it. So it's not a predictor of the future, but obviously futures traders at this moment thinking that crude oil will come down in the future. Now, this does beg the question of, can only one market win? Historically, the correlations do say that, we don't tend to see a dollar bull market coinciding with a crude oil bull market. So historically speaking, you would think that one will fall. Of course, anything can happen. The last 3 years, we've seen both markets appreciate. And that being said, both markets can also move lower, right? So we'll see what happens with this crude market. Futures traders thinking it will come lower. Historically, looking like as if the dollar market can stay high, can hold on to the bid that it's seen, that crude by the correlation might have to move lower, but anything can happen. Also, don't underrate the fact that both these markets are historically expensive. They can both fall as well. Plenty of outcomes on the table, but one thing's for sure is extreme action in both.